Welcome to Momentum Monday. Today is August 15, 2021. Howard, what's that drink? Is it Powerade?
I got double rided. I just did Peloton and I got a real ride.
Good. Are you getting ready for Tour de France or what's going on?
Yeah, I got a big Italy trip coming up, 8 days in the mountains, no days off. I'm on a quest to just, I'm in shape for it. I got to get down 5 or 6 pounds. So I got to watch what I eat.
Good. Look good.
Feel good. What the market looks good, feels good too.
Some of it. It's a market of stocks.
Bring us today.
Let's go to it. So the market is currently worrying or trying to price in two threats, basically, inflation and COVID. So earlier last week, we saw big breakouts in industrial metal. So anything steel, copper, aluminum were breaking out earlier in the week. And they're still consolidating and looking constructively for the most part. Many of those names, I mean, on the S&P 500, the best performer last week was NUE, Ucor, steel company.
Wow.
Boring, but big breakout. So it's a mix between inflation and infrastructure and the new infrastructure bill. So definitely that's going for it. Also, financials broke out last Friday, and for the most part, are holding their gains. Obviously, they're not a fast mover, so we can expect some.
But they could be. Like, oh, wait a minute. So where's the gains? They pulled back a little bit?
On Friday.
I mean, they could be, I've been wrong about this, but you don't have to get them all right. The Goldman just doesn't look back. I mean, they
all look the same. They all move the same as a group. They all broke out last Friday when the jobs report came out much better than expected. And therefore, good jobs report means higher inflation expectations. So they all move in a group. But interestingly, in the meantime, we're not really seeing a sell-off in software that we saw 2-3 months ago when the market was scared that higher interest rates, higher inflation would mean that all the richly valued software names would get hit. And they did get hit, if you remember, I don't know, a few months ago when many of them hit like a 20, 30, 40% pullbacks. But they're kind of holding good here. Many of them have built a big base and are kind of slowly setting up or moving higher. And we even have some new names that broke out, new software names that broke out on earnings and are holding well, very richly valued. So that's the interesting part. So
yeah, I mean, Datadog, which, my geeky friends and early investors who haven't sold shares just love buy the dips. They're telling me, look at that breakout.
Earnings breakout, holding well. So this is it. So we have rising inflation expectations, but they're not impacting the richly valued software stocks. So that thesis is not being played out this time. And
this is one of the better looking software, Datadog. Even Snowflake kind of coming up the right
they're
side
looking
of
good. Yeah, definitely. Even what was your PLTR? Palantir. Even they had a tiny earnings gap.
Interesting. There's so tracking IPOs. There's so much supply coming, from lockups. So in the software space. So
maybe it will keep a lid on those breakouts.
It might keep it lit.
But I think it's a miracle that if really the market is worrying about inflation, that all the richly valued names are really holding so well. On Friday, we kind of saw all the so-called reopening plays per week have been weak recently. I mean, if you look at energy, oil, XOE, I guess it's in a range, but definitely starting to show some relative weakness.
Oil prices at the pump are huge.
I know. Look at the relative strength rating. It's kind of bear flag here.
But the price is if you go to fill up your car, you notice.
I know. It's definitely a lot more expensive than it is. And also, interestingly, the same you can see in hotels, relative weakness, airlines, relative weakness as of late. So definitely.
Yeah, but if we go back, considering where these things were in March, if we go back to the monthly, I don't know. I mean, we have really, airports are still a mess. Like there's a lot of risk. I just don't get it. I don't get paying 2018 prices for broken industries, especially that are now 2 years under change. Again, I want to travel. I'm going to be fair. I just think got to stick with tech and software and even crypto now. You got to go further out on the risk curve to take that risk. For those that played I was going to share my screen here. I was just going to hang on one sec, Ivan. Can I?
Go ahead.
I really found this interesting. This chart. Can you see my screen?
Let me stop sharing so you can share. Okay.
It says I'm screen sharing.
Okay. Now we can see your screen.
You can?
We can, yes.
Okay, so you can see this chart from Calum is really interesting, which is, you can see how many tabs I have open, so
yeah,
OCD, but investor confidence beats consumer confidence. This is like the perfect chart of why rising prices tell you, it's why people are momentum investors. The divergence here is incredible. Generally doesn't last very long.
It's interesting how they measure consumer confidence.
Again, it's just one chart, but I do feel that, and here's why I feel it. It's like, go to the airports, like it's, in Italy, wherever I go, it's quiet. Like, sure, the best restaurants are busy, but service is terrible. People are finding different types of gig economies. You have this onboarding of new investors. So of course, prices are going up, investor confidence high, speculation is high. But at the tail end, you still see people saving and worried. And now, New York kind of back thinking about masks and shutdown. There's this, if New York can't get it right, who can, So I think that gap closes somehow. Hopefully consumer confidence kind of catches up. The markets are healthy, not from a confidence standpoint, but they're healthy from a capital standpoint. There's
from a liquidity point of view.
Liquidity. There's just so much liquidity. So, predicting that is hard. I was going to just pull up Charlie's feed here. Hang on one sec. And I think he made a great case here. Look at the commodity prices over the last year. Sorry, you've got sugar, you got natural gas and gas up 70% the last year. Look what's going on. And then the treasury, this is what we got, real 10-year treasury yields below 4%. That's what's driving, these two charts and the equities higher and the push into crypto. All right, I'll stop screen sharing and go back.
All right.
So that's driving China, and then I'll talk about financial inclusion, right? So you've got investor confidence high, Ivan. So let's pull up Square and PayPal. But there's this big talk amongst the libs about financial inclusion. And don't get me wrong, middle class has disappeared. They're not giving you the truth of why the middle class disappeared. The 40s to the 80s, or 50s to the 70s, whatever, 50s to the 70s, or 60s to the 80s, it was all about CPG brands. If you think about Midtown Manhattan, it was all like Mad Men. The middle class was like selling you, Easy Bake stuffing and Procter & Gamble products. And it was, an advertised-driven TV world. Now we're in an internet, digital, distributed world. So, of course, the jobs have changed. Okay. So there's this big fight about financial inclusion. And that's why I think you have all of a sudden this BNPL, buy now, pay later, Square buying BNPL and PayPal launching their own. They're going, that digital layaway is financial inclusion. It may lead to debt in the wrong places, it generally does, because the people who can't afford it start buying stuff on buy now, pay later. And then on the brokerage side with Coin and Robinhood, you have a perfect storm of financial inclusion, of people being able to invest. And so, we've reached this, there's all this talk that there's no financial inclusion in the underbanked, yada, yada, yada. But there is a group of 100 million Americans that have never had better access to investing at a time where they really need to invest because cash earns zero. So these are all bullish long-term trends. You know, obviously there's going to be bear markets along the way, but the fact that we onboarded 100 people and now BNPL is the new credit card. Because when I went to school, Ivan, if we pull up Capital One, COF, you know, back in the 90s or 80s, when I went to school, go to a monthly or a weekly. And this was the devil to us, right? This was the buy now, pay laters of the 80s and 90s. They would line up when we started college and get us hooked on credit. And then the last 10 years, these kids don't think about credit, right? It's all Venmo, debit, yet, you know, living month to month, saving money, not going on credit. So it'll be interesting. There could be this pickup in the S&P earnings multiple because of this credit economy and investing economy. So that could be one of the things. Now that could be priced in over the last year, and that's why we've seen this jihad off the bottom, is because this BNPL and Coinbase and Robinhood were coming. So I think we've at least caught up to that, and that's the good news. It's there is some fundamental underpinnings, and now you have this digital full-scale economy brewing, where, you know, my thesis is if we pull up, I don't know if we can pull up Ethereum, but
sure we can. Just not on this platform.
Let's pull up Ethereum. But I think what we're starting to see is people truly leaving their money on the digital side, and that's pulling out a lot of the money that's being printed, which is kind of dulling. I mean, inflation would be 10 times worse, I think, if money wasn't flowing into this, because it's coming out of the physical world and hooking itself into the digital world. And, you know, if this digital world can stay strong and keep sopping money from the physical money printing side, we could damper some of that inflation. Obviously, it's creating inflation in asset prices and digital asset prices, but it's not connected to the stock market. I mean, it may eventually affect spending if these things all go to zero, but that seems unlikely. So that's kind of the macro outlook to what's, you know, probably helping this stock market. But again, you got China, you got Afghanistan, you've got, you know, a shitty reopening. And so there are reasons to just, you know, kind of just keep in the back of your mind. All right, so financials look good. What other sectors look good? Semis?
No, semis are not really looking good. They pulled back, so they might bounce. So they pulled back to their rising 50-day.
But not terrible.
Not terrible, definitely. But obviously the semiconductor equipment stocks got recently hit, you know, broke down last week. But the NVIDIA, AMD, Qualcomm, they're looking good, holding well. They're among the market leaders. So definitely, for the first time in a while, you have like both inflation plays like industrial metals, financials, and some tech like software looking good. And which is the curious thing is that,
and on the e-commerce side, eBay broke out. So even though Shopify and
and the curious thing is that we're supposed to be in that 3 months that are really weak for stocks, August, September, October, and they're holding well despite of weak seasonality. On Friday, the interesting thing, I saw some defensive.
Also, financial, sorry, on the score, there's PAGS is great, you know, trying to break out, which is
it tried to break out, but kind of weak break out.
The Latin American, keep an eye on this. So it's the Latin American version of Square.
Yeah, XP is doing better.
XP is a brokerage, correct. And then there's Mercado Libre. So Latin America, despite the crazy governments,
they have some good. These are the 3 stocks that are really holding well there. That are tech.
Sorry. Keep going.
Stone has been absolutely crushed. For whatever reason, we don't know why. I thought Warren Buffett is a big investor there.
Yeah, I was. I've stopped out of that for PAGS. It's just
So I was saying that on Friday, it was curious to see that some of the defensive sectors are leading and breaking out, which is interesting. You know,
a lot could be related to, you know,
and consumer staples.
A lot could be related to Afghanistan. I mean, it's a pretty serious situation.
I don't know, but definitely defensive name. I mean, not defensive like military. I mean,
how are the we haven't talked about them here for months. How are the military defensive stocks doing?
Like, what are they? Give me some examples.
I think General Dynamics. Maybe I haven't checked. Well, Boeing's always a turd.
I think that it was something like defense, some ETF. Let's see, DEF, maybe this one. Let's see.
That's defensive equities. There you have General Dynamics.
What was the other one? There was a Drone Play. Doesn't matter.
Don't worry about it.
I'll check it out. Let's see. Is this the one?
And I think you had Microsoft breaking out too.
Well, as I said, software names are holding well, definitely breaking out.
Look at that. I mean, it's
Microsoft,
very underowned.
Apple.
Yeah.
I don't know if it's underowned, but
well, I don't know. Like, there's so many people that are Apple or Microsoft.
It's showing relative strength, and Facebook even is holding well. Like a lot of software names are looking good. Had good earnings reactions, and in a good market, they might have another leg higher. They might continue higher, or they might just consolidate.
On the swing side, what are you looking at? I'm just sticking with what I'm sticking with. But
well, as I said, some of the software stocks are looking good. They might continue high after the big earnings breakouts, and also some of the industrial metals, as inflation and infrastructure play, are still, I think, looking constructively and might be in play as a swing. So we'll see.
Okay. All right, everybody. Summer, we're getting to the end of summer. Trying to enjoy it. Trying to think if there's anything not acting well. My Spotify's not acting well. I think a lot of it has to do with crypto and the fact that just I'm looking through.
Solar is not acting right. It's breaking down for whatever reason, which is interesting. While coal is making new highs. Very paradoxical. But let's look at Spotify. Yeah, new 52-week lows.
There's nothing redeeming about this. Getting back a lot of gains.
Pretty big, 45%.
I think it's just a lot has to do with the fact that they can't. It's relentless competitors. Square bought Tidal. You've got still my favorite, most used app with Netflix, but Netflix too. It just can't get right.
Yeah, Netflix hasn't gone anywhere for a long time, and they have so much competition that they probably just perform as well as the S&P.
Yeah, but they're still digesting these games phenomenal. The next move is going to be huge. I think international, they own, is over in Europe, and you can't get HBO and you can't get these other ones. So I think it's not as bad as people think.
Of course you can get HBO in Europe. What are you talking about? You can get anything.
You got to have a VPN. It's complicated. No, you can't.
That's not true. You can still get it. You don't need to have a VPN for HBO.
Look at Ivan just calling me out.
Yeah, it's not true. They have a lot of competition, Howard. You just don't want to admit it. Netflix is not.
No, of course there's competition. There's competition to YouTube. Your competition to TikTok.
Exactly.
No.
Apple TV, Amazon. There is a lot of competition for Netflix, and they cannot afford to keep raising their prices. I mean, I don't remember the last time I watched a Netflix show that I really liked. So I'm not really watching.
That's why I'm bullish. When you start liking Netflix, then it'll get better. No, you make some great points. I think Spotify and Netflix on my 8 to 80 list are really are driving me nuts. But that's generally, Google was driving me nuts for 2 years, and then boom.
Yeah.
So it's hard to bet against these behemoths. But at the same time, Spotify, I think, is, as much as I love the company, it just doesn't have the moat. And I think you're seeing that in the stock prices.
What do you think they need to change?
I don't think they can do it. I mean, it's like they're a slave to the labels. So as much as I love Spotify, they're a slave to the kings, which are the labels. And I think, you see some moves by Square buying Tidal, and you see some of these. There's a couple decentralized music sites. Listen, Spotify is going to be around. The question is, can they be, a financial powerhouse? And right now, they're not. All right, buddy.
All right,
that's why you kind of constantly got to look through your portfolio. There's just no, you got to constantly be curating. Have a great week. We'll talk to you soon.
Yep. How do I stop this? What happened? All right.